The problem is gold could be $300 or $400 or $500 an ounce higher than it was when people called in. This is the problem, right? This is why I've been telling people to buy for so long, right? Because all of a sudden you want to buy and you can't get through to the gold companies, right? Because they're not set up for the volume. Now, fortunately, we have the online shopping cart now. So the best thing to do when you go to Schiff Gold, and you should go to Schiff Gold, is use the online cart. Don't wait for a person to call you back. It's a long line now. Just buy the inventory. Whatever inventory we have, just buy it. Because we're going to run out, especially silver. We are going to run out of silver. Everybody is going to run out of silver. That is the problem. And what do you think is going to happen to the price of silver when there is no silver, right? So you got to buy it while it's here. Again, this is not a bubble. This is the pin. You know, I've been saying that what's happening in gold and silver is the financial story of the year, of the decade. It should have been a big story last year. It should be an even bigger story this year. In fact, it should be the only thing that they are talking about because it's the only thing that really matters right now to the global economy and to finance. Yet, you look at CNBC, it's business as usual. If they mention gold and silver, it's in passing, and they don't even care. And it was mentioned at today's Fed press conference, and I'm going to talk about that in a few minutes when I get to it. But gold, as I am recording this live podcast, is up another $70 this evening after being up $235 during the day. $235. Gold closed earlier today at $54.14. But an hour ago, gold was up more than another $150. We almost got to $5,600. Gold was up $400 within a single day. Now, I mean, it's not midnight yet, so who knows? Maybe it'll make new highs and it'll be up even more. Silver made a new all-time record high an hour ago. Silver got above 119. It almost hit 120, but it got above $119 an ounce. It's now trading at just over 117, which was the record high we set on Monday. And because we sold off, everybody thought, oh, the top is in.
Despite record gains, gold and silver stocks aren't reflecting the metal's explosive rise. Most silver equities remain down, and even gold mining stocks barely moved. The mainstream financial media's inability to connect the dots mirrors the Federal Reserve's confusion. While central bankers proclaim confidence, the real story is unfolding elsewhere. Investors who understand these signals are already acting, buying metals before supply shortages intensify. In contrast, casual observers are left chasing a narrative that misses the underlying shifts. This disconnection between perception and reality highlights a critical lesson. Knowledge and timing in markets often outweigh sheer capital or hype.
You know, silver was up a couple of bucks today. Most silver stocks were down today. That's how insane it is, right? Gold stocks were barely up. Some, hit new highs, but it wasn't a big day. If you just looked at gold stocks, you would have no idea that gold was up $235, right? You'd think, oh, what's it up, 50 bucks, 40 bucks? No, right? Investors are clueless. The financial commentators are clueless. The Fed is clueless about what is going on right now with gold and silver and what it portends. That is why you listen to the Peter Schiff Show, because I understand what this means, because I was predicting this. I knew this was going to happen. I could see it coming from a mile away. The mainstream media, which had no idea that this was going to happen to the price of gold, they don't understand why it's going up because they didn't expect it. If I've been predicting this for years and now it's happening, okay, I know why it's happening because I expected it to happen. I actually expected it to happen sooner. But the mainstream financial media didn't expect it to happen at all because they don't know what they're talking about. Right? They are clueless as is the Federal Reserve, right? It's the blind leading the blind over there at the Federal Reserve. But before I get to the FOMC decision announced today and the press conference, which I don't know if this is, they keep topping each other in absurdity, but I don't know if this one contained the most, blatantly absurd comments from Powell, but maybe it did. But before I get to that, let me just kind of go back to yesterday, because yesterday was a big day. Yesterday was the biggest day for gold until today, dollar-wise. Gold was up like $135 yesterday, which I guess is nothing compared to today. But gold made a record high yesterday. But what also happened yesterday, the dollar got clobbered to a 4-year low. The Swiss franc, the dollar fell to an all-time record low. The dollar has never been lower against the Swiss franc than the level it hit yesterday. We also got consumer confidence that came out at a 12-year low.
The U.S. dollar has tumbled to 4-year lows, with the Swiss franc hitting unprecedented levels. Simultaneously, consumer confidence sits at a 12-year low, contradicting claims of a booming economy. Global capital isn't flocking to America, it's withdrawing. Investments require dollars, yet demand is falling, signaling declining trust in U.S. financial strength. Meanwhile, gold rises as a safe haven. The disconnect between political rhetoric and economic reality is stark. Public sentiment, investor behavior, and currency trends all point toward underlying vulnerabilities in the U.S. economy, emphasizing that conventional narratives often obscure fundamental financial truths.
So the dollar's at a 4-year low. Consumer confidence is at a 12-year low. Gold's at an all-time high, and Donald Trump is out there saying we have the hottest economy in the world. How is that possible? Right? Voters aren't buying it. The public, if we had such a hot economy, people would be more confident in the strength of the economy. If we had such a hot economy, capital would be flowing into America. See, Trump keeps talking about all this money that's being invested in America. Well, if that were the case, the dollar would be going up, right? If you're going to make investments in America, you're making them in U.S. dollars. So if there was trillions being invested in America, the dollar would be going up because people all around the world would have to buy dollars to make those investments. The fact that the dollar is tanking shows you that Trump is lying. They aren't investing in America. They're divesting from America. They are selling America. They are getting out of America because we don't have the hottest economy in the world. We have the coldest economy in the world. The consumer knows it. Investors knows it. Just that Trump doesn't know it. And all the Trump ass kissers in the Republican Party don't know it because they keep parroting the lie that we have this great economy. And they're just going to go down with the ship, and they're going to take the whole party and capitalism down with them because it's going to elevate the credibility of socialism. So all this stuff happened yesterday. And also, by the way, Canada's prime minister, I didn't mention this, but he gave a speech, right? And in his speech, he said that the global political order had been ruptured, right? And Ray Dalio talked about how there's going to be a new political order, right? What are they talking about? They're talking about the end of U.S. dollar dominance. That is the political order that's being turned upside down, right? And that's what's going to topple America's economy because we depend on this order. This is the order where we get to buy everything, right? We don't have to work hard. We don't have to produce, but we get to consume. We get to write checks that nobody ever cashes. We had a great deal going, right? And Trump blew it, right? Now, it was going to happen eventually anyway, right? Whether Trump escalated it or not.
Global shifts signal a historic upheaval in the political and economic order. Central banks are increasingly favoring gold over U.S. treasuries, marking the erosion of dollar dominance. Traditional mechanisms that allowed America to consume without producing are under strain. Supply chains, industrial capacity, and labor shortages amplify the risk. As the world remonetizes gold, the U.S. faces a structural reckoning. This isn't speculative. Precious metals are already reflecting the shift. Nations and investors are adjusting, recalibrating portfolios, and challenging America's historical economic supremacy. The era of effortless dominance is fading, replaced by heightened competition and the need for tangible production.
And I went over on prior podcasts how Trump had poked the bear and brought this out. But now it's out. And the order is being turned on upside down. And central banks are remonetizing gold. They don't want dollars. They don't want treasuries. They want gold, right? And this is a game changer for America because now we can't write those bum checks anymore. Now they have to clear. Americans have to produce again. We can't do it. We don't have the factories. We don't have the infrastructure. We don't have the supply chains. We don't have the trained workforce. We're up shit's creek, right, without a paddle, right? Because we don't make paddles anymore. They're all made in China. So this is a major collapse that we're going to go through in the dollar, in the bond market. Gold is just telling you that, right? This does not happen. I've been buying gold and silver for 25 years. I've never seen this, right? So something broke. But if you don't know what to look for, if you don't realize that we're in a bubble, you don't see the pin, right? You don't know. And by the way, and I apologize for this, but somebody on my X account posted, "Hey, Peter, nobody's answering the phone at Schiff Gold, and no one's returned my voicemails." So I looked into it, and we had about 150 voicemails that we hadn't returned yet. Now, some of them may have been the same guy calling twice or three times, who knows? But the fact of the matter is now the phones are ringing and we can't even answer them. Now, I've been told that every single one of those voicemails will be returned by tomorrow.
Gold and silver demand is outpacing supply, straining dealers and online platforms. Buyers are encountering long waits and inventory is vanishing quickly. For silver, shortages are particularly acute, raising the potential for sharp price spikes. The market dynamics are stark. The metal's value is being driven not just by speculation, but by real, tangible scarcity. Timing is crucial. Investors acting today secure access to assets that may become inaccessible tomorrow. The metals aren't a bubble, they are the pin, exposing weaknesses in the dollar and bond markets. Understanding scarcity, timing, and fundamentals is essential for navigating this historic moment.
The problem is gold could be $300 or $400 or $500 an ounce higher than it was when people called in. This is the problem, right? This is why I've been telling people to buy for so long, right? Because all of a sudden you want to buy and you can't get through to the gold companies, right? Because they're not set up for the volume. Now, fortunately, we have the online shopping cart now. So the best thing to do when you go to Schiff Gold, and you should go to Schiff Gold, is use the online cart. Don't wait for a person to call you back. It's a long line now. Just buy the inventory. Whatever inventory we have, just buy it. Because we're going to run out, especially silver. We are going to run out of silver. Everybody is going to run out of silver. That is the problem. And what do you think is going to happen to the price of silver when there is no silver, right? So you got to buy it while it's here. Again, this is not a bubble. This is the pin. The bubble has been pricked. The bubble is in the U.S. bond market. The bubble is in the U.S. dollar. The powers that be, the Federal Reserve, they are clueless. They are more clueless now than they were in 2008 on the eve of the financial crisis. Right? They couldn't see that, and they can't see this. But anyway, as crazy as yesterday was, today is even more insane. God knows what's going to happen tomorrow. Right? Tomorrow, I get on a plane and I'm headed for El Salvador for the Bitcoin conference. But by the way, you got Bitcoin, you had better sell it. I'm telling you, the risk of the market imploding. Bitcoin did not go up today. Where is Bitcoin? It is 89,000, right? The biggest day. Gold added more value today than the entire market cap of Bitcoin.
Bitcoin, once hailed as digital gold, fails to replicate gold's safe haven properties. While gold surged $400 in a single day, Bitcoin's price languished below $90,000. Early adopters have profited, but mass adoption has plateaued. Many Bitcoin ETFs were initially funded by gold ETF outflows, highlighting speculative rotation rather than intrinsic value. Unlike gold and silver, Bitcoin faces liquidity and concentration risks. When investors seek exits, demand is insufficient. Precious metals, in contrast, remain tangible, globally recognized, and increasingly scarce. The lesson is clear. In times of uncertainty, real assets with proven resilience often outperform digital narratives.
But Bitcoin shouldn't even have the current market cap because it doesn't really have any value. Yeah, it's at $88,687. It's down. Gold's up $400 in a single day, and Bitcoin is down. You think that's digital gold? You think that's gold 2.0? That's bullshit is what it is. But if you have it, get rid of it. Now, I know if you sell it, that means some other fool has to buy it from you. So if I help you avoid losing money, I'm making somebody else take the loss for you. But I'd rather have people who listen to my podcast not lose money, right? The people who don't listen, okay, well, they're on their own. But if you got Bitcoin and you listen to this podcast, funny, I joined this WhatsApp chat today. A friend of mine put me in this WhatsApp group. It's an investment group. And they said, hey, we got a new member, Peter Schiff. And the first guy says, oh, Peter Schiff, I want to thank you. You told me about Bitcoin. I learned about Bitcoin from you in 2011 when you talked about it, and I went out and bought it. So I told, he said I was a big gold bug, but you started talking about Bitcoin, and I looked into it, and he bought it in 2011. Now, imagine how much money I made that guy, right? But I hear this all the time, right? People bought Bitcoin because of me. But I said, okay, well, now sell it because of me, because it's going to go down. Look, the whole digital gold narrative is falling apart. The bottom's going to drop out any day. People are just waiting. People keep saying, well, it's eventually going to go into Bitcoin. All the money going into gold and silver, it's going to go into Bitcoin. No, it's not. It already would have done it, right? The problem is everybody who wants to buy Bitcoin already owns it, right? Everybody knows about Bitcoin. Everybody's heard the story. And if you don't already own it, it's because you don't want to buy it. That is the problem. Everybody is in. Now, when some of the people who are in want out, there is nobody to take the other side of the trade. Michael Saylor can't buy all the Bitcoin. So that's it. And a lot of the money in the Bitcoin ETFs, that money came from the gold ETFs. It came from the gold mining ETFs. I said that at the time, that the first couple of months where all these inflows came into the Bitcoin ETFs, all the outflows were from gold ETFs and gold mining stock ETFs. What an asinine trade, right? The most boneheaded trade you could have made.